You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the Infinite Banking Mastery Podcast. In case you couldn't tell, my voice sounds a little different today. It's because I have a cold, which I think is very wrong. I don't think there should be such a thing as colds in the summer. We should just be able to enjoy the summer without having to catch any kind of cold because there's plenty of vitamin D for us to collect, at least in Washington, because we can go outside and it's not too hot. So we can sit out there, collect the vitamin D. It shouldn't be a thing, I'm saying. Anyhow, today we are going to continue with Mythbusters. Today's myth, it's too complicated. The infinite banking concept is too complicated. Some people hear of IBC and before giving it a chance, just simply decide it's too complicated. It's overwhelming, it's too difficult to understand. But honestly, what's happening is really very simple. To put it very simply, all you're doing is saving money into a product that's much safer than a bank, in my opinion, and lots of people's opinion in this industry. You're saving money into a product, a whole life product, creating a pool of cash over time that you have complete access and control of, income tax free, all of your life. You're just creating a pool of cash that you can control in order to finance the things you need, want to invest in over your lifetime. You are creating a pool of cash that you can easily access whenever you want to use for whatever you want. And so long as you are borrowing against it, when you access these funds, then the entirety of your account balance continues to earn a guaranteed crediting rate and whatever dividends are declared by the company each year. Because, of course, you can just take a distribution. You can just take a straight withdrawal. That's also an option, but we teach that it's best to borrow against the policy instead so that your money continues to grow and continues to earn as though you never touched any of the money. And of course you didn't, right? Because you borrowed against it. So that's why we teach that, but you do have the option to just take a distribution. And remember that those distributions will be tax-free up until you've pulled out the amount of your cost basis, however much you've funded into the contract. Of course, another important factor is that your policy is with a mutual life insurance company and that you have a participating dividend-paying whole life contract. So you see, it's simple. You fund money into a contract, create a pool of cash from which to borrow against, and then borrow for whatever purpose or goal that's important to you. And meanwhile, your money continues to earn because you used your account balance, your cash value balance, as collateral and borrowed against the account. So your money continues to earn. And every dollar that you run through the contract retains its earning power and continues earning for you for the rest of your life. And at the same time, it's buying future dollars at a discount today. Those future dollars are the death benefit that will eventually pay out. You're able to buy those dollars that will pay out in the future at a discount today, so good deal. Sometimes the death benefit is of the least importance to people, like especially those people who are single, but you never know how life will turn out, who you will meet, if you might get married in the future, or somebody comes into your life that's very important to you. You may find the death benefit to be valuable someday for some purpose. For example, I have a client who is a single woman, a very intelligent CPA. When I first helped her, she was single and is still single, so didn't care much at all about the death benefit. She was just excited about IBC. She ended up buying out the current owner of where she worked with other CPAs in the firm and became a partner in her CPA firm, and all the partners wanted a death benefit on each other for protection of the loan that they took to purchase the firm. They wanted to protect each other in case something happened to one of the people. Their death benefit would pay out and pay their share of the loan to get their share paid off. So at that time that this was happening, and she was in the process of becoming a partner and buying out the firm, she wanted more insurance. And turns out she was not insurable at that time. She had gone through some health issues and so was not insurable. But luckily, she had her whole life policy that she had already been building for years. So she was able to use that for the purpose that she needed. The death benefit may not be important to some, but it can be important unexpectedly. You never know. Anyhow, back to the topic. What's actually happening is very simple. Heavily fund a whole life policy with dollars over and above the cost of the policy in a way that keeps the policy income tax free. We don't want it to be taxable. The higher the premium and the more you fund, the higher your cash value account and the more you will have access to when it comes time to address one of your goals, a large expenditure, a real estate purchase, or other investment, or your retirement. It only sounds complicated when people question the simplicity, which of course everyone does, which is why Nelson Nash's book, Becoming Your Own Banker, is so helpful to teach this concept, and why we practitioners go through extensive teaching. It's really just to explain the why. Why would I want to do this? That's where all this teaching comes in, to help you understand why you would want to house savings dollars into a whole life policy at all. Why not just keep all those savings dollars in the bank? Why aren't banks the safest locations for our funds? Why whole life? How do I access funds from my policy? How does it work? Why does it matter what company or type of policy I have? What's the difference between just having a policy and banking with my policy? How do loans work? These are the types of questions that make it feel all more complicated. But what's actually happening is, again, so very simple. Okay, so the next myth, I will cover 2 of them today, is infinite banking is an investment scheme or a scam. Now, I went over this particular myth maybe a little over a year ago in a podcast. Well, obviously, you know how I feel about this one. This is most certainly not true. It is not a scam or a speculative investment. Instead, it's a solid financial strategy that teaches how to create your own family banking system. I will say that over the years, just about every single person, I want to say 100% of the time, but it's probably not quite 100%. But every single person that I've spoken to or taught this concept to who did not first read Nelson Nash's Becoming Your Own Banker has said, this is too good to be true. And that's why we go through the extensive teaching that we do. Because it's absolutely not too good to be true, and instead is something that's been available to us for quite some time, and that the wealthiest in our nation have known about and been utilizing for decades. It's nowhere near being a scam, as it's based on one of the oldest financial vehicles in existence. I know that when you're learning this and excited and maybe mention it to some of your friends or family because you want to share your excitement and you think maybe they should learn, most of the time your friend is going to look at you like you're nuts. They're going to talk bad about it, try to find every negative thing ever said on the internet and throw it in your face. We are definitely swimming upstream with this concept. But you know what? Keep doing what you're doing. Nelson always said, the majority is never right about anything. So don't worry about what the naysayers say. Instead, just continue reading and learning. And when you're ready, connect with an IBC practitioner to help clarify the concepts that still confuse you and help to put a plan in place for you or you and your family. And when you're ready, if you'd like to partner with me, I would love to help you. Feel free to reach out to me by email. You can reach me at valerie@alphaomegawealth.com. Thank you so much for tuning in. I do appreciate every listener, and I hope you have a wonderful week.